Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Stuart Winchester of Marble. Stuart, how you doing?
How's it going? Good morning. I'm glad to see you.
Yeah, good. Well, look, I'm glad you joined in the brews because we are joining in the afternoon, but we release this in the morning.
I know exactly. Well, it's morning here. It's morning here, so I'm playing it straight down the middle on this one.
That's true. It's just me being disingenuous.
Yeah, exactly. I'm so far skating easy on this one.
Well, Stuart, look, thanks for coming on the podcast. I really appreciate it. And we start this in the traditional format. Marble is a business that I know, but mainly through you. But people out there might not be because it's relatively at the start of the journey. So please explain, what Marble is and what you guys are trying to achieve.
Yeah, absolutely. We definitely are early in the journey. So Marble is sort of a set of technologies, but we put it together in two ways. And I think it's probably easier to understand it in the two ways that you can actually interact with Marble rather than all the technologies. So happy to talk about those too. We have marblepay.com, our consumer website. Anyone can go set up an account. What we do there is we sort of have built this one hub for your insurance or digital wallet for insurance and insurance documentation. Mm-hmm. We pull automatically insurance documents in, give people and families a place to organize all of their insurance documents across property and casualty, life and health, and hopefully even into warranty, title, some of the more esoteric forms of protection. And then we also deliver rewards for that. So we give people rewards for syncing their insurance, for referring friends, for taking quizzes, surveys. And we've only been live since April of this year, but down the line, we'd like to give people rewards for even embedding safe driving behaviors within the Marble application, making payments, a lot of kind of exciting things, basically bringing insurance into one digital account, the way you have Mint or Robinhood for your stocks or Mint for your budget. Then we take all that technology that we built for that, and we also deliver it to carriers. And we'd like to deliver it to brokers too, but we haven't done that yet. But we do deliver it to carriers today. And we build sort of white labeled or co-branded reward and engagement programs for them using our points technology and our behavioral technology. So we have both live today. And it's been very exciting. We're a very small team. We're only 8 today, and I think we're punching above our weight. But we've been around just over a year, and we've had the product live for under 6 months.
Mm-hmm, mm-hmm. Thank you. I love the way that you put that as well, because it already starts to kind of lead me down the line of kind of thinking about the separation of kind of the customer experience versus the technology. And it's kind of refreshing that that's the kind of conversation that we seem to have now, because I think previously, heavy focus on the technology, which by all means is what enables you to deliver that kind of value proposition to the customer, but customers don't care, right?
Yeah. Could not agree more.
Yeah, like as a consumer, I was thinking about this morning. I had a software that I bought for my business, and it was a CRM software. And essentially, the person that sold it to me was trying to tell me why it was so clever, and essentially, I was so stupid, and because I was struggling to use it, and I was like, I don't really care how it works. It just needs to work.
It just needs to work. I mean, this is maybe as a little bit of a tangent, or maybe not. But one of the sort of founding ideas of Marble, like where Marble came from, is I used to work at a company called Better.com.
Yeah.
Now sort of an online housing platform, home ownership platform. But when I started there in 2018, it was really a mortgage company. Mm-hmm. To sort of fast forward, basically my job there was I became the general manager of their insurance vertical. So I stood up the home insurance practice, became a licensed agent, built this national practice that sold insurance through the mortgage funnel. But to this conversation, we eventually had a whole team of agents across the country and whatever, but I was the first agent, right? I got licensed, and so I would be on the phone with people. And we built these deep, beautiful integrations with Lemonade and Hippo and, other third-party providers. And I'd get on the phone with customers and I'd be like, pretty good, right? Like, you're getting that's a bindable rate online. Took a lot of work. And people would be like, yeah, whatever, I don't care. Like this price is bad. Or like, well, what about my coverage? And I'd be like, wow, yeah, they don't care at all that it took like this data model to beautifully parse an appraisal document and place it into Lemonade's quoting API and pull it back, because they're already like booking flights online, opening bank accounts online, trading crypto online, doing all. And so it's like they don't care. They just want it to be good and to work. And we were, patting ourselves on the back because we built this like better mousetrap. Ultimately, it still came down to the main things like pricing, customer service, coverage, brand recognition. So yeah, so you just want it to work.
And no, it's not a tangent at all, and I think that's really interesting, because I know when we spoke before, you were surprised by the popularity of like the most simplistic part of something you delivered at Better, wasn't it? The sort of wallet, there was a sort of wallet mechanism or something.
Exactly, yeah. It was we just built these webhooks that were, we went to Lemonade and to Hippo and a couple other partners, and we said, look, we for the mortgage, we need that insurance document back instantly, because our underwriters need to look at that insurance document and make sure there's enough coverage that matches the Fannie Mae guidelines for underwriting. So we really can't sit around and wait for your agents to bind it and email it. We need it to come instantly. So our engineers worked with, and Hippo and Lemonade were fantastic, and we set up these webhooks that the moment a policy was bound, the most current document came back, and even if you went in and changed your policy, we webhook the new policy back. And that was the part where customers were like, wow, I do not know where any of my insurance is. I'm going through this mortgage. You're asking me where all, especially if it was a refinance. It's like, you're asking me where this stuff is. My husband, my wife put it in a drawer. I'm taking photos. I'm scanning it. I'm asking my agent. I don't, I know where my W-2 is. They could just log into their employment platform. I know where my stock portfolio is if they had to give their assets. But then they were like, you asked me for my insurance. I don't know where it is. And that was sort of for me. And there's a lot of founders with stories like this. I was like, that could be a whole product. Yeah. And in some ways, it was about it was sort of one of the two pillars, with rewards being the other one, that ended up becoming Marble.
And I wanted to ask you what you think. What did that tell you about insurance here? Like, and to sort of broaden this out a little bit, do we do the simple things in insurance badly, or do we not do the simple things?
I would love to have like an hour-long conversation about that question, first of all, because I'm like, my mind has gone like in a million sort of like, Marvel superhero, gone in a million different directions. But I would argue, but I reserve the right to change my mind if someone smarter than me has the other opinion. Sure. That we don't do this, we just don't really do the simple things. And maybe we don't do them that well as well. But I think in order of operations, and why I would argue that is like, in the fundraising journey for Marble, a very common response from the venture capital market was, people don't want to engage with their insurance. Why are you building this thing? No one wants to touch it. No one wants to look at it. It's not stocks. It's not crypto. It's not assets. It's not whatever, because people don't want to engage with it. And only about halfway through the fundraising process, as we started getting traction, did I develop a response to that critique, which was like, could you give me an example of a time we've tried to engage people with their insurance? And most investors would sort of be flummoxed. They'd be like, well, I don't know, actually. I guess we've never really tried. And it's like, yeah, maybe we just haven't asked the question yet. And I think that comes back to your point of, do we just not do the simple things? I think like insurance is deeply esoteric. It's old, it's complex, and it's high stakes. We're talking about massive, diversified risks with huge losses in a changing risk environment. And I think this swirling amount of complication, and people who've been really entrenched in that complication, and people who have been traditionally entrenched in that complication and expressing it in a human-to-human sales process, there are a lot of smart people in insurance, but I think that whole environment does not set insurance up to just deliver something really simply. And what I always think about, I like possibly going to get myself into like light securities problems here, but like I remember when I was like in high school, I was like, oh man, I think I want to figure out how to like trade stocks. So I like made in like 2005 or 2006, I made like a TD Ameritrade account, and you had to like mail a scan of your ID in. You had like, it was so painful.
Yeah.
And it was literally just like basically like a stock trader's UI put onto a website, and then they were like, now anyone can sign up, which was a disaster. Then you go to Robinhood and you're like, it's just simple, it's intuitive. It's done again, it's built from the human perspective out, and then they figured out how to make it work in the ecosystem, not the ecosystem coming to the consumer. So I would just argue that I just don't think we've done that inversion yet in insurance, and we don't make it simple yet.
Yeah, and I think I spoke about this on I'm trying to think who we spoke about this slightly on the podcast, and there's something about the complexity of the regulatory environment, the changeable risk environment, and managing insurance at a macro level.
Yes,
that requires complication, and the industry set up very well to manage that and manage that kind of risk reward ratio. It's like manage the kind of regulatory environment. The challenge then becomes that we forget that when you filter all that insurance down to the individual consumer, it's not fit for purpose. And one of my guests, and I can't decide whether it was the guys from Besurance or it was Element, but we talked about, I think it was Herman from Besurance was talking about that realistically the consumer or the customer in insurance for a long time has been the broker. So sophisticated seller to sophisticated buyer. And then when you look at the individual kind of level, personal lines, insurance, it's not been built for that person, really. It's almost like we offer it, but it's not been thought about at that. So it's no surprise to me that change is starting to happen, but it's happening from people that are joining from outside the industry.
I think there's like two responses I have to that. One is that I think it's worth acknowledging that some of the friction in, and this is maybe an opinion, not a statement of fact, but some of this friction in equities trading, some of this friction in home finance, some of this friction in insurance probably exists. I want to say friction, like changing regulatory, all the things you listed, changing regulatory environment, changing risk environment, probably exists for a good functional reason, right? There should be some friction. We do not want to see a new carrier launch who's like, wow, I figured out that I could just sell everyone in Long Island on the coast really cheap policies, because then they're going to get wiped out in the next hurricane. And there are reasons that we have friction in this space because, again, the stakes are high. You're talking about people's net worth, their assets. You want to get it right. I do agree, though, that you are seeing that's what I mean. The second point, though, is that friction can still exist, but it's not being communicated in any way that consistently to the end consumer. And I mean, I think another example of this that I see, which is so kind of funny when you start to make this mindset shift, is with Marble, like what we do is like we put all people's insurance into one account, and because I mean I'm an insurance person. Sort of. I mean, only for a few years, but enough now. I've drank the Kool-Aid.
Yeah.
I was like, okay, I was like, hey, Ade, our CTO, was like, let's start with property and casualty, and then we'll move to life and health. So we were like home, auto, pet, blah, blah, blah. Now, all of our users then came in and were like, why can't I add life insurance? And we're meanwhile like working on like pet insurance, which way fewer people have. And we were like, oh, well, that's in the life and health vertical. Because in the US, it's regulated property, casualty, and life and health. Consumers don't care. It's all insurance. They don't know that it's two different testing licenses or it's two different regulatory structures. Like that's completely abstract to them. So again, like brokers cared about that because they sold different units. But to your point, if you now swap the broker for Stuart Winchester, random consumer person, it's just insurance. I just want it all in one place. It just protects the stuff I care about. And we haven't, again, I don't think that mindset shift has really trickled all the way down yet.
No, and because it requires coordination on an industry level as well, and that's the resistance towards the opening banking environment. That's still going to sort of play out, but it's certainly starting to change. Talking about kind of more macro level challenges, something that I was made aware of is that reward is quite difficult to do and achieve in the US regulatory environment. So I just wanted to sort of understand your journey to where you got to. Did you look to other geographies, other countries for inspiration? Are there other kind of companies or countries that do it particularly well, reward?
Yeah, so I'll start with the second part of the question, then I'll wind back to the US context. But I've looked a lot at Australia and the UK for places, and I think some EU markets too, that touch on rewards or include rewards components. And some examples that come to mind, I'm actually struggling. I mean, I know I touched on, like, I remember looking a lot at, it's not an insurance company, but looking at like Ibotta, which I think is possibly UK, or they may be US with a UK presence. I can't remember, but they're like they offer, like, rebates on purchases. And then I remember looking at, and they just raised some money. I remember looking at Hedvig in, I think they're a German company, but they're an EU based company, and they don't really have a rewards component, but they have like a referral component, and they do all the insurance in one account. And then I've actually had some phenomenal conversations with a head of innovation based in Australia for what is it? It's RCA insurance in Australia, I think.
Yeah.
Is that right? Yeah, not RAC. That's something else. RAC insurance. And we just got connected on LinkedIn. And they have been and Brad, who I've been talking to there, has been like a phenomenal sort of thought partner in this in many ways, because they've really been thinking about this quite proactively. And when I say this, rewards engagement, ongoing engagement, retention, cost reduction, and doing it in a way also that, is critically not discriminatory or price fixing or any of that stuff. And that, to bring it back, is a little bit of the US context, right? Like, there's two key things to sort of keep in mind about the regulatory context in America. One is that America is a fairly young nation, and insurance predates it by many, many multiples of decades. And two, so I think we're still maturing in some ways. And two is that we're regulated on a state level, right? So I think in the US we have 51 or 52 insurance regulatory bodies, because Puerto Rico and I think DC have their own insurance jurisdictions as well. So you have this like federal level, and then you have all these different like little fiefdoms of regulation. And in the US, where this rebate law comes from, is from the selling of life insurance, I believe. Historically, what you might have seen is people, in life insurance agents, basically incentivizing you, Alex, to buy insurance from me. And I was like, I'll give you my first year commission, or I'll split my first year commission for you. And what that led to about a century ago was typically like white men soliciting other white men and giving them better sort of rates of their commission, which made it harder for non-white men to get life insurance, which was horribly discriminatory and unfair. So that's where the regulation comes from. In the US, I would argue, and we're starting to see this due to COVID, there's a growing awareness, as there has been in other markets, that you can still offer well-defined, discrete incentives for things that actually make everyone better risk, more manageable, and better customers, without touching, at Marble, we don't know anything about our customers' demographics, really, right? Like, we don't have different levels of rewards. Anyone can get the same rewards for anything, right? So it's just a maturing marketplace as the conversation develops.
I wanted to talk to you about your journey for investment, because let me get the number right. How many people did you pitch to?
Oh my goodness. I think like 106, maybe even more than that. It might have even been more, but the number I have in this blog post, I'm still actually writing, but I gave a presentation to the team, was 106 distinct funds.
Yeah.
Probably closer to like 120 conversations. But it was a lot. And it was in the peak of COVID. So it was like on Zoom, like this, the way you see me now is how many of the greatest minds in Silicon Valley and New York have and in the middle, really anywhere have seen me, which is just on Zoom pitching them Marble. So yeah, it was a lot of conversations.
I imagine that must be so much harder. And that's something I don't know why I've not really thought about it so much, because I think I've been, most of my working life is obviously on the recruitment side, is dealing with people that have got post-investment, because, without being a mercenary, they kind of need some money to pay for some services.
Yes.
That's the way it works. So they've kind of gone through the pain. So most of the people have been working with during the pandemic. But what's it like to do that without being in the room? Because you must get so much feedback in the room, as we know you do, like buying signals. It must have been a bit harder. But then, arguably, do you know any different if that's the experience you had? I don't know.
It would be a lie to say I'm excited for our next round of fundraising because I don't know that I have recovered yet enough, but I am interested to do it probably more in person.
Yeah.
I was pretty not in like a leadership position, but I was very involved and very in the room during a lot of Better's fundraising. So I have done that, some of that in the room fundraising. And what I will say is the negative is exactly what you described. It's very hard to read body language, even with cameras on, right? It's very hard to evaluate engagement, to read sort of what are hard to perceive clues about people's reactions to distinct parts of your message. Because I did pitch, multiple times, right? I was iterating the message between pitches. And I think that candidly, I was probably 50 to 25% slower. It took me a lot more feedback because it was more diffuse to learn when, hey, drop this slide, pivot this message, move this up. Because for every pitch where you get someone who's very engaged and you can tell via their engagement that they're reacting to something, you get a camera off, you get someone who's doing email, you get someone who just, is stone-faced, whatever it is. Because you kind of need to it's like acting like on Zoom, you kind of need to over express yourself to really get that feedback across. So I'm excited to do it in person because I like to think of myself as someone who, cares about people's reactions. So I'm excited to watch people's reactions in the room. The flip side, I will say, for any other founders or really anyone who goes through this process, is you can just do no travel. I mean, it was 40 minutes, 40 minutes, 40 minutes. It was a lot of pitches, but our whole fundraise took 3 months. It wasn't and it was exhausting. And my poor wife, who was working from home at the time, has heard the Marvel pitch 106 times. But you could just close one Zoom, take a quick walk around the apartment, pitch the next VC. So that is the nice thing, is that it was fairly it didn't impact the business operations too much because I was still able to be kind of here and present and not traveling through airports all the time.
Sure. Yeah, and that's good. I mean, I think if we go on the kind of fail faster principle for good development, it almost follows that, because if a pitch is not going to go your way, if they're not going to be interested, at least you've not invested that kind of 2 days out of your time where you had to fly to another part of the country to do that. And look, I'm sure there's plenty of times you do this as well. I can only imagine it's just like business development pitches for me. Some you kind of go, well, that was a waste of time.
Yes.
You kind of think, I don't know why you invited me into the room. This is no one wants this.
It's sort of I'm not coming up with a movie comparison, but it is a little bit like this next fundraise which will be, I think, in the new year sometime. I'm going in to be a little bit more grizzled about it, and a little bit more like there were a couple pitches, to your exact point, where I was oh, not going well, but let's dig in and finish this thing. And I think I will be more prepared this time because we're in a much stronger position. Not to be rude, but be I think maybe we can just wrap this up. It's not feeling because you can also tell by not even sometimes people ask questions where you're okay, you just don't get it, and that's fine. VCs have different verticals, they have different areas of focus, they have different expertise. But it might be look, I just can tell this, takes some more time to think about it. But yeah, I do think I did that exactly. And I just was time to just slam through it, I guess. And not do that anymore.
Yeah. No, it's a tough one. Did it, you said about iteration. I'm really interested in this. We had the guys from Superseed on, and Jared made the point that what was quite difficult was to know what feedback to take on board and maybe change the pitch and even potentially change the offering, and know when to kind of dig in and go, no, I'm right, this is something to stand by. How do you kind of manage that?
It's really hard. It's really hard. And I will say a phenomenal piece of advice that I did not take before I started Marble was I talked to the founders of Young Alfred, who are amazing, Jason and David, and they were like, "Do not be a solo founder." And they were like, they laid out all these reasons, and one of their main reasons was that like fundraising is brutal, and having someone who can kind of tag team that with you, and it is important. And I've learned that I think when I say tag team, having someone who could have been in the room and be like, provided that extra sort of foundation of being like, no, keep going, you're right about that, or like, hey, that's good feedback, because when you're alone, especially when you're doing kind of final round pitches where you're maybe pitching a whole group of partners, it's like pretty isolating, because I mean, you literally are, on Zoom too, you have like tile, you look them all on LinkedIn, you're like, oh my God, these are, heavy hitters, and someone picks at one part of your business. So what I sort of developed, so two things happened that I think helped. One is that we launched our product in the midst of fundraising, and very quickly we were able to see things happen that either led credibility to certain messages or made me reconsider how much I dug in on other things. And I'll be very specific, so two things. One is the way I describe Marble, even at the top of this conversation, was not how we used to describe it. We used to basically have this very sort of whiplash pitch where it's like, we have consumer, oh yeah, and we also have enterprise. And only after going through like numerous pitches and getting this sort of, and seeing this sort of like double take when I would switch gears into enterprise, did I step back and say like, okay, we should actually just talk about it in terms of all the technology we've built, and then ladder it down. But don't do this sort of hard pivot into like, because people are like, are you two companies in one? Like, what's going on?
Yeah.
The thing that I sort of dug into more, which is funny, or I find sort of funny, is like, many venture capitalists did not buy that we could give enough rewards to make people engage with Marble. And I would hear a lot like, oh, I would never do anything for $5, never do anything for $10. And, I have regrets about this, but I was like, I would sort of take it like, yeah, maybe we should like look at the amounts. Then we launched the product and people are flying through it. People want to earn rewards. They want to engage. There's other things that are useful besides rewards, but people, we just did a quiz. Like, we had hundreds of our users do a quiz for $1. And it's like, oh, maybe like some of the richest people in the world, venture capitalists, are not a good barometer of how many rewards are useful to people. So it's like, and I think I should have probably like put that together in the room a little bit more. But I was very much like, yeah, you're right. But then I'm like looking at all our like thousands of users like doing it. I'm like, oh, maybe not everyone in America is a venture capitalist.
Yeah.
And maybe people do want, an Amazon gift card. I mean, I do. So that was the only thing. That was a classic thing where the product started to give me confidence to dig back in on something that I had actually backed off of.
Thing is, I think there's another thing as well to look at something in, just talking about reward, looking at something in out of context. Because, for example, I would probably say I wouldn't be that bothered to do something for $5, but then I've got a Coinbase account, and I like nothing more than running through the questions on some new crypto, because I get, $5 worth of that crypto.
We were just
they've gamified it. And I've got 5 minutes, I'm making a coffee. I'm like, yeah, I'll make $5. Well,
We were just talking about that, the Coinbase quizzes. And yeah, I mean, again, I couldn't agree more. I couldn't agree more. I mean,
I'll do it all because it's, I think it's the relationship as well people have with their phones, and it's so much that's outside of the kind of financial reward. It's a win. It registers in your brain as I've won something, or I've achieved something, or it's that psychology. I won't tell you about it. I'm sure this is the basis.
No, but it is like, I do it too. Like, I mean, I do it on all sorts of things, out in or out of Marble, right? It's just like, it's very human.
Yes, I agree. So I'm going to skip some of the more investing stuff, because I think that's I think that's some stuff that you could write a massive blog post in. It sounds like well. I wanted to talk to you about your team. You're running a fairly small team of 8, which you mentioned. You're a year in. Something you said to me in a previous conversation I thought was really interesting. You mentioned that you were doing too much. And I wanted to understand what you meant by that, and then what you've kind of implemented to kind of adapt.
Yeah, I I think that like stretching, I'm of this sort of school of thought, I guess, or whatever. Maybe it's not a school. I'm comfortable stretching a little bit more and having and asking my team and our team just stretch a little more than to overhire, because if we stretch, we can extend our burn. We can sort of really identify where the needs are, because I think some staffing needs or some hiring needs or some talent needs can be passing, right? Can be temporal or like temporary rather. So I've definitely been a part of companies and teams where a project comes up, an initiative happens, a reporting cycle occurs, and you're like, we need someone to do this. And then like a year later, you're like, why? What is this person's job again? And it's like, oh, well, they were hired to solve this. And in fact, if you can sort of hire an early team of kind of fairly flexible individuals, you might find that these things don't sustain the need. Conversely, you can see sustained needs stand up and be like, okay, now that is a full role we need.
Yeah.
And so what we've done internally is I think we've done two things. I like to think pretty well. One is that we have a phenomenal group of like outside consultants and advisors and what I would say part-time experts all of whom who have other things in their life, so they're looking to work part-time. Adi, my CTO, and Isabel, our head of marketing, we all have these great networks. This is not our first rodeo, so we've been able to bring in Matthew Stevens, who is building his own design practice, but used to lead design for the Zebra. And he helps us and is really a huge guide and sort of counsel for us on the design front. We have Bethany Buer, who used to work with us on marketing at General Assembly, me and Isabel. And she's pursuing things in her professional life, but also has some hours to give us on marketing. And she can knock out, email copy, email code. So we built this, what I would say, very efficient and agile additional vertical of six other kind of experts who can help us tackle stuff. And that has given us a lot of flexibility in terms of both cost structure and punching way above our weight. The other thing too is that I'm just a nut about process. I'm constantly tweaking processes, updating processes, documentation, workflows, and I think we've just been able to use all this, sort of to your point about having that conversation with that salesperson. I will eke every bit of functionality out of something that we pay for, like Trello, Jira. I will get any sort of efficiency out of it I can before we go and hire someone. And that's been good. I do think to answer your question though directly, my career has led me through being a financial consultant to then I was the GM of this coding boot camp, and then I did market. I've done a lot, so I'm always very tempted to just to jump in and do something myself. And I think that I'm trying to learn that is actually not only am I not as good as the people on the team we have to do those things. It's actually I need to be out in front a little bit more. Not from a vanity perspective, not because it's the CEO or whatever, but because that's actually the part I play on the team is pulling us forward. So it might feel good and feel like I'm pulling my weight if I go in and code a few emails, but that's actually over a long timeline a detriment to the company.
There's a huge part on that. And I think particularly the sort of founder principle is that you're usually a founder because you've got either an elite skill set in one area, or you've got a really broad skill set and the right ideas. And then I do see these businesses where there's always an interesting point for me, because I work with a lot of seed, Series A, Series B businesses, and that kind of friction where the founder met everyone and interviewed everyone before they hired, and then as they grow, you see that becomes a bottleneck sometimes. As just one example,
it's
my world.
No, it is such a bottleneck. It's such. You can look at, but I have worked at companies that have been hundreds of employees, and the CEO does, insist on interviewing everybody, and it's what are we doing here? This might be the only time I talk to the CEO in my multiple, if I were here. Why would I talk to this person now?
Especially when on the day-to-day basis. Exactly.
I'm never going to interact with this person.
And the CEO probably isn't the best judge of whether that person is the right person at all. That's just one example, but you see that, and I think the challenge of letting go, but having the flexibility, having a really highly skilled bench of talent that you can flexibly work with is a massive boon.
It's a
what I get, the conversation I have more than any other is probably people that don't have the network looking for me to help, because, you know, for example, if you've got a really good idea, I probably have 10 conversations a week about someone wanting to get some sort of part-time CTO. And you know,
it's an unbelievable, I feel very no, I mean, I feel very privileged to have this network. And I mean, I think it's fun. You know, what's interesting is that and I'm sure you've seen this yourself, right? Like, second-time founders have such an easy time raising money. I'm so envious of them. And I'm a first-time founder, and really but what I always want to try to express to people is like, yes, I may be a first-time founder. We may be sort of a first-time team starting this early. But this is not anyone's first time round generally, right? Like, all of our executive team have phenomenal networks in the New York tech scene. And I think this sort of full-time and part-time flex structure we've built is a reflection of the fact that, like, we're able to dip into it and not only find people we trust, but like industry pros that we trust. And I don't know that I honestly don't know that we've been given the sort of credit for that at least in the investment market, which I always come back to. But, you know, as an early stage company and founder, it's where my brain always goes. But like, we've been able to plug some gaps and grow through some gaps that, again, while I may not have experienced fundraising that much, I have like a LinkedIn and like an email inbox of people I can be like, you are one of the top, 50 people that I can think of. Do you want to come work on this with us?
Yeah, and that's great. And I always say to people, it's like when people think LinkedIn, for example, I talk to loads of people who don't utilize it enough, and I'm stunned by that, because, you know, it is such a good tool to do that sort of stuff in a lazy way. I mean, we were talking about ITC, conferences. These things are all great, but the physical, you have to be there, you have to kind of engage, they're exhausting. You know, things like LinkedIn are such a good kind of opportunity to do that. Podcast, another one. You know, any time
but it
reach out and speak, right?
It is. And like, you don't have to, people love to tease on LinkedIn about, various sort of ways that people use it, but, you don't, it's sort of like judging Instagram for one type of content on there or whatever. Like, you can use LinkedIn in a way that is like, kind of still quote unquote like a normal person, and use it to your advantage. Like, I love to see when people I used to work with are like promoted or have, and like just using it as touch points. Like, ultimately it could just kind of be like another way to stay engaged with people. You don't need to post your like, I wake up at 6 a.m. and like do 1,000 crunches routine. You can just say congrats on the new job and like be a polite friend.
I love that stuff. That stuff cracks me up.
That stuff is so funny. I would give a lot to have every one of those people who proves it like have to verify it with LinkedIn or something. Be like, no, we'll let you post it, but like, you got to show us that you get up at 4 and like
I had a funny,
the hardcore.
I'll get this back on track and talk about insurance in a second. But I had a really funny example of that. So I did my first ultra marathon this year.
Wow.
And it was important to me. It was something that I just wanted to see whether I could. And I'm not a runner. I've never run a marathon, and I decided I was going to run 109 kilometers with my mate.
I was going to say, what is the distance of an ultra marathon?
I think it's 50. Anything that's 50k and above, and this was 109. And so we did it, and we did a good job of it, and we weren't that quick, but we did it in 15 hours and 25 minutes. And so I was really pleased about it. And look, I don't share that much personal stuff, but I was like, this is great. And it was great because I did it with my friend, and there's a bit of a story to that, and he's from the industry I'm in. Anyway, I put it up, and then this guy, who I do not know, I have no connection with, we're not connected to, put up a photo of himself, and just with a faster time. And like, that's the only thing he put up. I was like, I don't know what you want me to respond with. I'm like, oh, you beat me? I was like,
it's one of the, that is like, people are wild sometimes. Like it's like I'm just trying to think about all the steps, and I know we should, but like all the steps that goes through. Like I'm gonna read how it's supposed. All right, I'm gonna like now I'm gonna go into my camera roll and I'm gonna select my photo. Now I'm gonna post it. Now I'm not gonna contextualize it or even offer a like cursory like, hey, glad to have you in the Ultra Runners Club. Just drop that on link.
I mean, he could have done some just humble brag of going, "Oh, welcome to the club. I just did this. It was great."
Even that, it still would have rolled my eyes, but I would have been like, "Oh, all right, you did like a passing attempt." Like,
and then I was tempted to continue it because there's a guy, and I think he works for Beasley, who did this like 268-mile run. And I was going to tag him, and I was like, "Well, you better take it up with this guy." Yeah,
have you seen this guy's time?
He's really serious, You
can just Photoshop his time and just keep making it higher until yours is faster. Well, it's funny. Like it's too, I got married right at the start of the pandemic in October 19, and my wife and I were fortunate to have like a little write up in the New York Times. And the New York Times posted it to LinkedIn. They didn't post it to Twitter. They didn't post it to Facebook. They just posted it to LinkedIn. So I started getting all these notifications, and it was like my friends being like commenting on. I was like, what's happening on LinkedIn? And it's like this, like it's like because everyone's like, don't post anything on personal LinkedIn. And it's like this like photo of my wife and I getting married, and like this like New York Times article about us. And I'm like, I didn't do this. This is not me. I'm take it up with the Times. Like I did not want this on here.
That's funny. I think personal stuff's fine, and I think some of it.
Yeah, I don't mind.
I actually think some of it's good. I think that's taken me a long time to get to. I spent a long time in my job, particularly trying to pretend that I fit in, and then actually embracing the stuff that makes you a bit different is positive. But anyway, I could talk for hours on LinkedIn, and I probably will. So I wanted to get back to Marble.
Yes.
I can't decide whether I suppose the summary of this question is like, what's the end goal? Because is reward a big enough play on its own? But with reward, how does the business create value for itself? What's the kind of journey on sort of ROI for you?
I mean, I think the very for the sake of like the being honest in the interview, part of this is we will let the market demand lead us to that answer. And what I mean by that, or to put that in a less jargony way, like we kind of need to find out, because I have some ideas that I'll explain, but like, it's early days yet, and we have some really promising results, but like, there's a difference between promising results for a startup and like $1 billion company.
Yeah.
My sincere like thing that I'm going to try to haul us towards, and we're getting the results that we need to see for that, is that you get Marble before you even have insurance. We want, in the same way that you get a Robinhood or a Mint before you have a budget or before you start trading stocks or what have you, Coinbase with crypto, you go to Marble because we are a credible way for you to learn, organize, and feel engaged with this really important household asset, $1 trillion asset class that protects the things you love. So we will have achieved our consumer mission if we actually are the conduit to how you protect your stuff and the people you care about. And if we do, and that requires doing a lot of things right, building trust, building community, building rewards that are meaningful, building a shopping experience that actually saves people money. Like none of this is easy stuff, but I think one of the big surprises that we've seen, frankly, is how much people want to use just the wallet function, right? Like, the other critique that we often had was people come in for rewards and they'll leave. And like that really, and I'm not saying this for the benefit of any listeners at this point, like that's really not true. We're seeing 3 policies per user in most cases. People are putting their new policies in. People need a way to digitize and understand and organize this stuff. So my real goal on the consumer side is like, you're like, okay, Johnny, Jill, you're getting your first car, your first house. make sure to set up your Marble account, and then you'll sort of put this. Then you might get insured by Lemonade or Travelers or whatever, but it's all going to go through this process because you'll earn some rewards and you can ask for questions or tips. So that's the view there. And then I think casting a line out, and we talked about this in previous conversation, that then unlocks us to do some really cool stuff in terms of, do we look at picking up risk ourselves? Do we look at setting up, MGA carrier relationships where we can actually sort of identify cool products that we could sell? Because the other thing is, like, our CAC for our consumer product, or like cost for acquisition, is like a fraction of what carriers pay today. Mm-hmm. So if we can find a way to sell risk into that, we can have a very profitable business.
Sorry, so it's because you're not trying to sell them anything, really, in a way.
Exactly.
You're saying, here's this thing that helps you manage this really difficult part of your life. So if you then wanted to turn on, I suppose the challenge is making it so you don't become someone that's trying to sell them something.
Exactly. There's some truly incredible companies that predate us by years, Cover, Jerry, Gabby, Young Alfred, Policies. They've done that, right? We're not trying to get into that space. We're too slow, too small, and it's not novel. Mm-hmm. So for us, I started better on the acquisition side. And the hardest thing about selling a mortgage is very similar to the hardest thing about selling insurance, is you got to find that person the moment they're talking to a realtor, the moment they're buying a car. So you have a very small window and a very crowded field to talk to everyone who wants to buy your product. What we talk about internally with Marble is that we don't have a crowded field yet, though it's getting more crowded. Mm-hmm. And we want to talk to you whenever. Do you have insurance? You don't have insurance? You're planning on insurance? We don't care. What insurance? Which insurance? Family? Just use Marble. It's useful. People like it. We have a huge group of ambassadors who signed up for no benefit other than they are evangelists for us. Like, it's just a useful product. Mm-hmm. So that's my deep seated goal. I also, as a more sort of rational, cool-headed business owner, have to say, I'm very intrigued to work with carriers on these loyalty white labeled co-branded products. Mm-hmm. It's maybe a little bit less of like a world-defining strategy, but it's a great business, and it could really shift the way people relate to their insurance carriers. Mm-hmm. So there's a world where I reserve the right to do we become a really trusted partner to power engagement with insurance carriers. Mm-hmm. Both are good businesses. I would like to continue to do both. I think they use the same technology, so they're a natural adjacency. I think in the next 2 years, we'll sort of see which one shakes out as the dominant, sort of as the winning factor.
Mm. I was going to ask you about carriers as well, because I know it's on your website about you kind of work directly with some. So that's a white labeling of the kind of reward proposition. Carriers and startups don't always kind of make brilliant bedfellows, right? So from your side, from the kind of small startup perspective, what would you want carriers to know about working with a startup?
I think so. So we are working with what I would term like the most quintessential traditional carrier, 1 million+ policies in force, national, auto, home, book. We're going to go live with them next month with a fully white labeled, beautiful rewards program. And in many ways, they've really not acted like this traditional sort of scary carrier. They've moved quickly. They've been flexible in across a couple different teams. And they've sort of, to give a more tactical answer, they've carved out a dedicated team to work with us. And that team has a mandate where they can really kind of move outside of the existing structures of the team. And I think that's really important. And the reason it's important, and I would say this to carriers or startups or other insurtechs who want to work with like small startups, is like, to put it very bluntly, like, we don't have much time, right? We're sort of like a butterfly. We live and die. We live and die. We live and die. You said this like at the top of the call too. We fail fast. If you want to use our stuff, you think it's interesting, you don't need to move as fast as us, but you need to be ready to have a team or a test that can move as fast as us, because we may not always thrive long enough to give you the results that we think we can deliver, which we think are really good and we want to deliver. And yeah, we want to make money from it. But we also want to make sure you make money. So I think just like what I would hope carriers would realize, that it's like some startups are not eager or pushy because they want to just make money, which again, it's a business as part of it. It's also like we can feel the threat of our own mortality a little bit. I measure my bank account in months, not years. So it's like I got to get something tested in the wild so I can keep providing value. So that's just like I sometimes I wish there's a little bit more sympathy towards that circumstance.
Yeah, I was laughing at that because I was only thinking about my own fragile. I run a two-man business. I'm probably I'm hiring at the moment, and I'm probably gonna hire a couple more. But I was thinking for about 2 years, it's probably been, COVID was horrendous for the recruitment industry in my world, and then it's been a brilliant year this year because everyone's kind of opened up. But probably only just stepped outside that really fragile environment where you're looking at it going, when I've been on these pitches where I'm going, this is a waste of my time. That's when you think it's frustrating. But then the other side of that is, as you were just saying, some people really get it. They dedicate a team to it.
Yes.
And when it works, it's so rewarding. I was going to ask you as well. I mean, that's the future we've kind of touched on briefly. I wanted to throw something in that I hadn't thought about. I suppose taking the kind of wallet principle to a kind of full commercial offering is probably, most insurance is arguably too complex, but certainly in the kind of SME space, small business. Is that on the kind of horizon? Because I'm sitting here going, I had to find out who I was paying insurance to just by looking at my bank account because I couldn't remember.
Yes. It's funny. It's actually one of the earlier conversations we had when we were fundraising was from a large commercial broker who was like, we would love this for our book. And actually there's some talk of like, we would love rewards too, like, because we can incentivize our businesses in our book to do risk assessments, to do HR training, to do, harassment training, things that actually, again, in aggregate, make them a better risk too. So it is something that I think would lead my amazing CTO to put his head on his desk if I was like, it's time for commercial because we're too lean and too small. But like, there is no, almost to the sort of, again, the topic we were talking about of like the many kind of frictions within insurance. One nice thing about them, again, is that there is some uniformity too, right? Like, it is fundamentally risk that can be improved. There are expenses that can be alleviated, and there's retention that can be sustained. And there's no reason that the same fundamental things cannot work across personal and commercial if you accept that those three things exist in both places, which I would argue they do. Mm-hmm. So we would love to get into it. It's just lands to conquer and how big the team we can sort of how big and how efficient the team we can build to take them on. And I think at some point too, and we've talked about this on previous conversation, like at some point too, it'll be time to really bring in a true insurance expert partner. I kind of play at the role, but I've been at this for like 4 years or so. It'll be time, I think, at some point to bring in a true executive, credible position who can help us navigate these in a way where we don't maybe step on every single landmine, which is kind of what we do today.
It's funny. I'm only laughing because I'm like, sometimes that's the only way of stumbling forward. It's just
I know. I'm not begrudging us, but it's like
a series of survived explosions.
It would be nice to have someone in the future who's like, that's gonna hurt.
Yeah, no, I completely agree. Well, look, Stuart, I won't take up any more of your time. Conscious as well to sort of keep the podcast to a manageable level. One last thing I just wanted to ask you in terms of, what's next on the immediate horizon? When are you raising money next if people are interested, and where's the best place to kind of reach out to you if anyone's kind of interested in hearing more?
I mean, I think the next big ones for us are we have a couple of other enterprise partners in the pipeline, and we'd love to get one stood up maybe January, depending on how quickly they can move. So that'll be exciting. On the consumer side, what we're most excited about, and our consumers are most excited about, is that we do have a mobile app launching in January, which is the most requested feature. 83% of our users have joined the wait list for it. Sure. So clearly we probably should have done it a little sooner, but it's coming, and I'm excited to have that and play around with it. And then, yeah, we'll probably be fundraising. I think we'll probably start the fundraise in February of next year. I don't know if that'll look like an A or like a seed plus, or the terms are all sort of meaningless to me, but and that'll hopefully power our growth, to really scale the business, both businesses into industry standard software or industry standard products. And yeah, I'm just Stuart at MarvelPay. It's easy with a UA, Stuart with a UA. Or as we talked about, you always find me on LinkedIn too. I'm always on LinkedIn.
Yeah.
My wife has muted me on LinkedIn because she can't stand to read my posts. But you can post to me, and I'll get it. So I'm pretty available in multiple different avenues.
Awesome. Brilliant. Stuart, it's been an absolute pleasure. Thank you.
Yeah, Alex, thanks so much for having me on.
Cheers, buddy. Bye.